Hello guys and welcome back. I'm Michael Glass for SCM Forex and we want to thank you for continuing to watch our video on how to be a successful trader. As always, we like to start off with our disclaimer. Any decision you make is your own. No matter what form of investing you choose, stock, forward, futures, options, there is a chance for a risk of loss. You can lose your money. The strategies and concepts we talk about are for educational purposes. Trade at your own risk. So as we said, this video series is all about how to be a successful trader. We're trying to put you in the framework. We're trying to let you know the habits and how successful traders look at the market. In order to do that, we put 5 videos together, really 6, an introduction, and then we broke it down into 5 parts. Understanding how the timing in the market affects your trading, how to use chart patterns and technical indicators to confirm what you're seeing about the market, how to protect your capital by using stops, and today, the most overlooked aspect of trading, mental fitness for trading, the psychology of trading. Again, this is one of the most overlooked aspects of trading. People so often are looking for indicators, they're looking for systems, they're looking for newsletters, they're looking for gurus, but really, the way to become a successful trader is to train your mind. So, this is one of those optical illusions. Do you see the duck or do you see the rabbit? Do you see both? Which did you see first? And, that's what trading is. What do you see? Because what you see, somebody else might see something else. When you see a breakout, someone else might see the beginning of a reversal. There's 2 sides to every trade, somebody getting in, getting out. Whether or not that person is profitable or losing is a separate issue. But that's what trading is about. How do you perceive the market? What do you see? I've talked about this before. In the beginning of the Matrix, Neo, all he saw were these numbers going up and down and up and down and up and down, and is he the one? And at the very end of the first Matrix movie is when he finally made sense of the numbers and saw the patterns. Again, that's what trading is all about. Making sense of the movement, whether you're using candles, whether you're using the dome, making sense of it so that you see the patterns and you can see the opportunities and take advantage of those opportunities. So, as I said, people often go on YouTube and Google and they say, what's the best indicator? What's the best system? And they're looking for that. And they believe that's this holy grail. That is how they're going to become this mega rich Warren Buffett trader. But again, the way to being successful is to train your mind. What are you doing to see, perceive, and act better about the market? Indicators are a part of that, but they're not the solution, because your mind is what allows you to act upon what the indicator is saying. So one thing that's really important is to understand, as we're training our mind, is that the market is not out to get you. See, when a trade doesn't work, there's not a mass conspiracy. Ashton Kutcher's not going to jump out of the van and say, hey, you're being punked. When a trade doesn't work, it doesn't work. It's okay. We can move on. The market is not out to get you. And that's very important for a trader to understand and to mentally get over. To get out of the way of your emotions and understand that a trade is just that, a trade. You see, a good trade is one based upon rules. Why did you enter the trade? Where are you going to enter the trade? What's your target of this trade? How much are you willing to risk on this trade? How you manage the trade? Whether the trade works or not doesn't matter. A good trade is one based upon rules, which is also a great way to get out of the way of our emotions. So the question is, where do your rules lead you? Do you even have rules? Do you have, and again, rules are different than a setup. I understand people have indicators and setups, but how you go through the process of taking advantage of that setup and using the rules to take advantage of that setup is what's going to make you a better trader. Again, your mind, internal versus indicators and setups, external. So in order to make better trading decisions, you basically have to create a process or a methodology, and that will help eliminate the noise. It will eliminate your emotions. But also, prior to entering any trade, you need to know your risk to reward ratio. You need to know how much you're willing to risk in order to make that profit. In other words, in order to be a successful trader, you need to create a checklist, a process, step by step, of how you're going to take advantage of each opportunity as you perceive them. Pilots, when they get on a plane, they got to go through this checklist before they can get off. Before you get in a trade, you need to go through a checklist. Sure, I understand that there are some markets that don't require you to prepare, but most do. And so as you prepare to trade before the market opens, and you say, if the market does this, I'm going to do this. If the market does that, I'm going to do this. And then that's the process of creating your checklist. You're creating if-then scenarios so that you can be successful in the market. You're not trading just to trade. You're trading because you've identified opportunities. Now, mistakes that people make is they believe the market is out to get them. Why do they believe that? Well, they're losing the internal dialogue in their head. There's all this battle going on. Why did you do that? You shouldn't have done that. Remember, a good trade is one based upon rules. Whether it works or doesn't matter. Even if you start losing a couple times, it doesn't matter. That doesn't mean that you don't go in and make adjustments based upon market conditions, but when you're losing that dialogue in your mind, it scares you, and then you're scared to take the next trade, and of course the next trade works. Another mistake is market context. Again, rules are good, but rules also have to take into context what the market is doing. All our videos, we talked about understanding consolidation days, breakout days, time of day, type of day. All that is very important to your trading. So it's one thing to have rules, but it's another thing to understand what the market is doing. That dialogue in your mind that you might be losing, again, affects your confidence to take the next trade. Revenge-based trading, I can't tell you how many times I've been up and then down. I should have just walked away, but and then I go down, and then I go down even more because I was revenge-based trading. I was mad that I was up, and then I lost. So definitely, that's losing the battle in your mind. Fear of missing out. FOMO, with all the cryptocurrency, that's a big thing right now, FOMO and FUD. Not knowing your numbers. So many people are trading, but they don't know what their percentages are. If you ever watch World Series of Poker, and they show two people going at it all in or whatever, and they always have those percentages. And they know, these professional pokers know that when they have, ace king, what the percentage of winning, or when a person has a pair, they know the percentage of winning. You should know your percentages of the trading style and the trading setups that you are trading. Again, rules-based trading is all about defining your edge. I trade this. When these things happen in my checklist, in my process of trading, that's when I trade. Outside of that, I'm sitting on my hands. That's what successful traders do. They have trained their minds to only act when the odds are in their favor and their probability of winning is high. Doesn't mean they're always going to win, but they know that the odds are in their favor. Remember, we say this in every video, a successful trader understands that the first thing you have to do is identify opportunities in the market and then apply the right strategy. Rules-based trading. So guys, that is the end of our video series on how to be a successful trader. May the force be with you. And again, the market's not out to get you. If there's anything you should take away from this video series, it's understanding the framework and understanding that there is a process that successful traders do to increase their odds, and they do this on a consistent basis. Define your edge, do one thing really well, and then you can add on. But define who you are as a trader, train your mind to be that trader, and you will be down the road to being a successful trader. Thanks guys, and I'll see you next time.